Hi, my name is Sigmund and welcome to another video on our sustainability series. In this video, we are going to look at the IFRS Sustainability Disclosure Standard, that is the S1 and S2. In the previous video, we've already touched on the new ISSB, which is the International Sustainability Standard Board, and the role it has played in the development of standards on the sustainability disclosure. We've essentially gone through that, and I will encourage you to watch that video to appreciate how far we've come. Now, in this video, we're going to talk about the S1, S2, the sustainability standards, which were issued by the ISSB. And these two standards have been effective from 1st of January 2024. And as you are aware, Ghana, ICAG has adopted this particular standard as a member of IFAC. We have adopted this standard specifically in the area of disclosures regarding sustainability. However, they are still voluntary and there's no requirement for companies to apply them unless it's required by the corporate reporting regulator in the jurisdiction in which you operate. Even though in Ghana, it's a requirement by ICAG. Exactly. So companies can comply with the IFRS accounting standard with no need to comply with the standards issued by ISSB, Sustainability Disclosure. So what it means is that, yes, even though the standards clearly, that's the sustainability standards, have been developed by the IFRS Foundation, companies could choose not to adopt it or apply this standard, even though they are already using the IFRS, which has been developed by the foundation through the International Accounting Standard Board. So what are the names of the two standards? IFRS S1, which is the general requirement for disclosures of sustainability related financial information. And this standard, that is the S1, provide a framework of requirements for disclosure. So the essence of S1 is to provide the framework, which obviously will guide entities in providing disclosures on their sustainability related issues in the financial statement. Disclosures on sustainability related issues in the financial statement. So S1 provides the framework. What about S2? IFRS S2 applies, or this standard, which is the climate-related disclosure, apply this framework to specific issues relating to climate change. So S2 is more specific, specifically issues relating to climate change, whilst S1 is the standard that provides that general framework, exactly, in terms of requirement for making disclosures on issues of sustainability-related information in the financial statement. Are we clear? So if somebody wants to know what is S1, that is the framework for disclosure on sustainability related financial information. What is S2? S2 clearly is the framework for the more specific disclosures relating to climate change. Exactly. So in both cases, the aim is to ensure that users of the financial statement have adequate information to support their decision making. Even though we have the S1 and the S2, these standards obviously are not enough. We will need more. So the board is currently working through a lot of research to deal with other topics like issues on biodiversity, ecosystems, human capital, and human rights. Obviously, all these issues will require certain work in terms of framework to help guide disclosures. So in essence, we're going to look at how the format of disclosure, how does the standard requires, how or what kind of format are you expected to use in making disclosures when it comes to S1 and S2. Now, both standards has built their format of disclosure on the requirement of the TCFD, which is the Task Force for Climate-Related Financial Disclosure, TCFD requirement. So that is the main requirement that S1 and S2 has adopted when it comes to making disclosures on areas of sustainability as well as climate change. So there are 4 categories adopted from TCFD are: number 1, governance, strategy, risk management, and then metrics and targets. So these 4 categories of main areas are what we are expected to provide disclosures on. So the format we are using, or S1 and S2 is using, has been borrowed from the already established TCFD requirement, which is the Task Force for Climate related financial disclosures. Exactly. So this allow, or this framework, or this disclosure format allows us or users to be able to identify the potential negative and positive effect of sustainability issues, and to be able to understand how the company is addressing these issues and how they are performing in the areas addressed above. So governance, strategy, risk management, metrics and target, companies are to use this format in providing disclosures. Exactly. So what we can do now is to run through all these four categories, know what is expected if it comes to S1 and S2 in terms of disclosure, as I said, has been borrowed or built upon from the TCFD requirement. So if you go in there, in terms of governance, we are expected to make disclosures or describe how the board has played, the oversight that the board has played on issues of climate-related risk and opportunities. And then also describe the role of management in assessing and managing climate-related risk and opportunities. So definitely, if you are to make a disclosure on governance, these are the things you need to describe. You describe the board's oversight on climate-related risk and opportunity, describe management role in assessing and managing climate-related risk and opportunities. In terms of strategy, you are to describe the climate-related risk and opportunities that the organization has identified in the short, medium, and long term, and then also describe the impact of the climate-related risk and opportunity on the organization's business, strategy, and financial planning. You are also expected to describe the resilience of the organization's strategy, taking into consideration the different climate-related scenarios. So if it's in terms of disclosures on strategy, this is what we expect you to disclose. As I said, this disclosure approach or categorization is based on the TCFD framework. Then we look at risk management. If the entity is expected to disclose issues on risk management, we expect them to describe the organization's processes they have in place for identifying and assessing climate-related risk. They are expected to describe the organization's processes for managing climate-related risk. They are also expected to describe how processes for identifying and assessing and managing climate-related risk are integrated into the organization's overall risk management. So if there should be any disclosure on risk management, the framework requires essentially all these to be disclosed. Then the final one is the metrics and target, where you have to disclose the metrics that you use as an organization to assess the climate-related risk and opportunities in line with each strategy and risk management process. You are also expected to disclose the company's greenhouse emissions and related risks. You are expected to also describe the targets that the organization used to manage their climate-related risk and opportunities and performance against the targets that they have set for themselves. Are we clear? So these are the frameworks providing guidance on the format in terms of disclosure, which, as I've emphasized, is based on the TCFD framework. So S1 and S2 adopted the TCFD framework in terms of the format of disclosure. We can also look at how entities could be able to know the framework. So S1, as you are aware, has the details of the conceptual foundation that should be applied whenever you are preparing a sustainability disclosure. So it's important that we consider what those foundations are, those conceptual foundations that an entity must understand when they are preparing the disclosure. So what are those conceptual foundations? These foundations are not too different from some of the conceptual foundations you already know when it comes to the standards issued by IASB regarding the conceptual framework, which is used by the IASB in developing standards. So nothing too much or nothing too different, just borrowing from what we already have in terms of the conceptual framework for preparing financial statements. So some of these issues, you may already be aware of them. In terms of these issues, when you are considering IFRS, most of these conceptual issues have already are things you've already may have been aware of if you are already in the area of applying the IFRS. So one of the conceptual foundation is materiality, which is very important, that a company should disclose material information about sustainability related risk and opportunities that could reasonably be expected to affect its prospect. The definition of materiality essentially reflect only financial materiality and not the double materiality I spoke about in our previous videos. Fair presentation. A company must make sure that a complete set of sustainability-related disclosures should be presented in all material respect fairly, exactly, in terms of their sustainability-related risk and opportunities. So fair presentation requires that the information presented should be complete, neutral, and accurate, and depict the risk and opportunities that has been presented in order to achieve a faithful representation. As I emphasize, most of these conceptual issues, you are already aware of them in the area of IFRS. Is that okay? Reporting entity. When it comes to the reporting entity, the entity that is making the disclosure should be the same as the entity preparing the financial statement. So therefore, if you have a consolidated financial statement, that financial statement should be accompanied with the group sustainability disclosure. Then in terms of value chain, the disclosure of material sustainability related risks and opportunities should relate to the company's whole value chain. So this is a very important conceptual foundation. In making the disclosure, make sure that the disclosure you are making relates to your value chain, the whole value chain that the entity uses in delivering value to their customers. For example, a full range of interaction in terms of your resources and relationships that relates to your operation. I believe it's clear. Then the final one is the connection information or connected information, where the information that you are supplying or should be supplied to investors so that investors can understand the connection between sustainability-related risk and opportunities, sustainability-related disclosure, is that okay? And then also sustainability disclosures and the financial statement. So the expectation is that in presenting your disclosures, there should be a connection. There should definitely be a connection in the information you are presenting so that investors can better understand the report you are preparing. In terms of identifying the information that you are going to report, because in terms of disclosures, one of the key things is to be able to identify the information that you are going to disclose. And obviously, the board has, even though developed the standard that is S1 and S2 to provide guidance, we don't have a complete guidance on some of these things. So we are borrowing from other framework. For example, if you are to make or identify issues of risk and opportunities, you can refer to the S2 specifically, or you could also borrow from the CDSB's framework when it comes to their framework for water-related and biodiversity-related risk and opportunity. Is that okay? You can also borrow from some of the sustainability risk and opportunity identified by companies which are operating in the same industry. So obviously, we still have a lot of work to do in developing various standards to cover all areas, especially when it comes to identifying opportunities and then also risk. So for now, you can use the S2 when it comes to identifying the risk and opportunities on climate-related issues. You can also use the CDSB's framework, or you can use the specific risk and opportunity reports that has been prepared by companies in the same industry or geographical area. And finally, when it comes to identifying the disclosure or issues to disclose, you could also refer to the ISSB standard where it exists or otherwise, or you could also refer to the SASB standard, or you could also refer to the CDSB's framework application guidance, or you can even use the GRI standards. If you want to make disclosures and you are struggling to identify the key issues to disclose, these existing frameworks have relevant guidance to help you navigate in making those disclosures. So basically, this is what we are expected to know about. It's very important that in understanding issues of sustainability, S1 and S2 has brought in a lot of knowledge in helping us appreciate how to make disclosures regarding issues of sustainability as well as climate-related risk. So on this note, we'll bring you more videos after this. One of them is essentially in the area of understanding integrated reporting. Watch out for that. Immediately after this, we'll share that video. And thank you so much for watching our sustainability series. I hope it's been an exciting journey, appreciating all the issues we have shared so far. And I hope you're going to like this video, share with a friend, like this page, is that clear? You can download our mobile application for our various programs in terms of tuition and training. You can do that. Aspire Executive Institute is the name. And my name is Sigmund. I'll see you in the next session. Bye-bye.